It's live.
Perfect.
All right. Hey, everybody. I got the timer. Hey, everybody. It's Quincy and John here again. I think this is episode 21. So today we're going to talk about the top 10 pitfalls to avoid when you're doing your loan.
Or top 10 things to make sure you're doing when you're doing the loan.
There you go.
So.
All right. We're going to get fancy here. We got technology working, hopefully. So
what happens when you put me in charge of the podcast? You know?
This is, yeah, you did it this time. Good job, buddy.
Only 21 times. So number one is pay your bills on time. I know that sounds very trivial, but when you're meeting with a lender, you can't expect the lender to fix your credit.
Right.
That maybe has taken 35 years to destroy. Fix it in a matter of minutes, or even months, or even a year. So make sure you're always monitoring your credit, paying your bills on time, and making sure everything's up to date. So that's number one. Right. Taking out new debt before closing. That is, anytime that you're in a real estate transaction, you're under contract, what happens is any lender is going to be monitoring your credit, and we're going to be making sure that you're not taking out a new debt. If you do take out new debt, we need to get proof of what the new monthly payment is. We need to get it added to your credit report, and it potentially could push you over your debt to total income ratio and make you not qualify for the mortgage any longer. Or you might have to push closing back because we need to get all the paperwork back in.
So this is even like, I know people always ask me, like, even if you want to buy new furniture for their house that they're so excited about, tell them just to hold off.
Yeah. So just July 4th sales, Memorial Day, Labor Day sales, wait.
Yeah.
If you're married and your wife's not going to be on the loan, or you're, dating somebody and they're not going to be on the mortgage, then you may want to take out the Ashley Furniture credit card and under their name.
Yeah.
But the good point with this too is I get a lot of people always say, well, take out new debt. Can I use my existing credit cards? Absolutely. Use your existing credit cards the way that you want to use them.
As long as you're using them the same way you've always used them.
Use your existing credit cards. Don't increase your balance. Keep it all the same. So it's talking about new debt.
At the end of the day, it's only a 30 to 45 day process.
Yep.
So we can all be disciplined for that amount.
Exactly. And again, any lender will monitor your credit to make sure you're not taking out new debt. And if you are, then we need to get that information the day after closing. So we monitor up until the day of closing. The day after closing, do whatever you want. But that's one thing. So
got it.
Staying local, that's a huge thing. I mean, right now, unfortunately, all these different companies are trying to get in. Technology has changed the way of real estate recently. I mean, if you go online or not go online, you watch a TV commercial, press button, Rocket Mortgage, is going to take you there. Well, guess what? Everybody's doing the same mortgages and everybody's doing it the same way. It's not anything different. Rocket Mortgage doesn't have anything different, and it's not going to be any easier. It's the exact same thing, except for they have a great marketing plan. You guys are recently experiencing some technology.
Yeah, I mean, there's lots of different at this point, at this stage. There's a lot of different technologies companies that are trying to come in and for better or worse, change the way things are done. And that's fine. Some things are great, some things are not. But I just think if you're you don't want to use somebody who is based halfway around the country or world to help you buy a house in Baltimore. Just use somebody who knows the market.
Yeah, exactly. Right. Again, staying local. That's the same thing with home inspectors, title companies, realtors.
Sure.
And lenders.
Yeah, I mean, if I called an agent and said, I can help you buy a house in Hamden, and they said, where are you based at? And I said, Chicago, that would seem absurd. I don't know why we do that with a lender either.
Yeah.
So, right.
Looking at homes before getting qualified. I mean, if you've watched any of our episodes, we've talked about that. Again, make sure you meet with a lender. Make sure you don't go out wasting your time, and make sure you don't go out wasting your realtor's time. And, look for a home that you can afford and know what your budget is.
Right. I always use the analogy or metaphor. I get them confused, but it's window shopping.
Yeah.
If you're not pre-qualified, it's just window shopping. You have no idea what you can actually afford. So.
And the biggest issue with us sometimes too is when clients will call me and just only shop rate, and why that's not a good idea. Again, look, rate's important, but rate doesn't impact your monthly payment as much as people actually think it is. When you're shopping for a lender and trying to find a lender, you want to make sure that you're working with somebody that, one, knows what they're doing, and two, is going to put you in the best product and program for yourself. Shopping rate, again, it's important to get a low rate, but different programs have different lower rates than others, and it might not be the right program for you. And the unfortunate thing too is a lot of people in this business, in the mortgage business, luckily not as many these days, but we'll do the old bait and switch. So hey, here your rate's 3%, and then you get to closing, and now it's 6%.
Right.
So you just don't want to experience that. Not fun. Cash is not king.
This is always a funny one.
It is. I've had a lot of people be like, well, John, I've got a whole bunch of money in the bank, or not in the bank. I got a whole bunch of money under my mattress that I want to use for my down payment and closing costs. Well, guess what? You can't use that money.
Right.
Any cash that you have laying around is not something that we could use for the purchase transaction. We have to have traceable, trackable money, and it's got to be seasoned, which means seasoned money just needs to be in your bank account for, we need to go back 60 days in most cases. So if you got that mattress money, we really can't use it.
Put it in the bank now.
Yeah,
and
I can't say that, but you can.
Yeah, I mean, I know I personally have seen loans like the day before closing go awry.
Yeah,
just because somebody deposited just a couple $1,000s in their account, and the loan got denied, and that was that. We have to start over. So, yeah.
And having funds transferred from others, this is huge, and this is a pain in the rear, we'll say that, for processing and a lender. Anytime that you have a transfer into your bank account from an outside source, meaning if you transfer money from your checking and savings account, that's totally cool. But if you're transferring money, say Quincy and I just went out to dinner and I just transferred him $70 for, the reimbursement of the dinner from my account to his through Venmo or PayPal or something like that. Unfortunately, any transfer into your account, we need to source, okay? So even if it might be $75 and you might be buying a $400,000 home, we still need to source that transfer coming into your bank account to make sure that it wasn't a loan, okay? So we need to make sure and source that money. So if you're going to transfer between your own personal accounts, totally cool, but don't transfer from other parties.
I think that's really important too, like when we're talking about gifts, like prep, especially if you're getting a gift from parents or somebody that hasn't done this in a while, prep them for that. Somebody's going to be looking for where their money came from. They might be asking for bank records of their accounts as well.
And again, if you meet with a loan officer before you do all this, we're going to warn you. Not warn you, we're going to advise you what to do and how to do it. And that's a perfect segue into not being prepared and organized. So being prepared and organized, number one thing, meet with a loan officer, get an idea of what you're doing, and totally get a grasp of what you're about to get yourself into so that it's not like pulling hair out. If you're prepared, then this is an easy process. If you're not prepared, it can be a very daunting process. Not planning on showing up to closing. This is as simple as this may sound. Plan on attending your closing. If you're not going to be able to attend your closing, then you'll need to get power of attorney set up, and it's got to be a specific power of attorney. If you're not going to make it to closing, make sure you tell the realtor and the lender, and we'll prepare this for you. But as odd as that sounds, I actually am experiencing right now on a transaction, and it is not a fun transaction. That we just got notified the guys in Turkey and not going to be able to make it to closing. So plan on showing up to closing and just communicate with your lender and realtor. Changing jobs, number one, pet peeve. And I actually think this is the last slide. So make sure you keep your employment. If you plan on changing jobs, okay, just don't do it until you close. We are underwriting and closing the loan based on your income and employment at the time of taking the loan out. So if you decide to change a job before closing, well, guess what? You may not qualify for that mortgage, or the income structure that the new company has given to you may not be a proper income structure and income calculation for the lender. So it's very important to relay that and to not do that.
Especially if you're commissioned. Even
if you're
more
commissioned, don't do that. Or bonus.
Right.
So, but yeah, that's it. Appreciate you tuning in.
Can we post, maybe we'll figure out a way to post that underneath this little slideshow or something, or at least a list so we can all recap it. So that's it. Thanks for joining.
Thank you.